And there it is. The markets are officially closed on this Wednesday, July 8th. Welcome, investors and traders. We have a lot to cover here in this very short 30-minute segment, so be sure to take some notes. We have oil is up, the war is on, and I got to tell you, we were talking about this a couple of weeks ago with our members when I was mentioning that I would not put on any negative delta positions on oil, which for those who don't trade options, that would mean short positions in the oil market. And I surely hope that folks had listened to that message, because oil is up pretty good. And I think it's going to continue to go higher as things heat up literally in Iran. Now, before we get to the main topic here, I just want to talk a little bit about the targets that were hit last week. Let's go over the markets here real quick, looking at DIA. First, this is the Dow Jones Industrial Average ETF, and you can see that my downside target here is still in place at 514.35. This is a little bit of a hammer candle, and so before we get down to this target, I would not be surprised at all to see just a little bit of a bounce, maybe even a trade up to fill the gap before coming lower into an ABCD pattern, which would bring us down to that target at point D. So stay tuned for that. IWM did a great job hitting the downside target here. In fact, we hit that target on Friday, excuse me, on Thursday, which was the day after we put out the report. Remember, we had a short trading week last week, and we wound up closing with this big red candle yesterday, known as a bearish engulfing candle. Now, the IWM, I think, has more room to go. I don't think we're going to see a bounce in that small cap sector, really, maybe not until the early next week. But the reason I say that is because we now are closed below the 20-period moving average. And so a lot of times after you close below that moving average, it tends to go down a little bit more before reversing and pivoting. And we also have an increase in volume here on the way down. If you've been following for any length of time, you'll know that an increase in volume is bearish, because that tells us that the sellers are getting more excited. Okay, now going right to the Qs, here's another one. Not only did it hit the target from last week, but we had a slight open target from the week before last at 701. And look at that low today was 791 cents. So we surpassed that by 9 cents. And we have a drop in volume on the way down. This is a little bit different than IWM. Remember, the drop in volume on the way down is more bullish, because that's telling us the sellers are losing momentum, right? One is bearish when the sellers are more motivated. The other is bullish when the sellers are less motivated. So that drop in volume is a key leading indicator. So be sure that if you have any short positions here that you're thinking about taking a profit in, I would certainly take that as a serious signal with regard to the drop in volume. Now, SPY, this one is still has a downside target in place for 735. Here's another one. We did not have an increase in volume. We did not have a close below the 20-period moving average. So I think we might see a little bit of a bounce tomorrow, possibly Friday, before going lower. But I can tell you right now, the way the markets are shaping up and the price of oil putting more pressure on the economy, I'm going to keep, I can almost be 100% sure at this point that the downside target in SPY is going to remain open at 735 when I do the report tomorrow. Now, hopping right to the VIX, I got to show you this. Look at this long shadow. In the morning, it looked like the VIX was going to take off and go hit my target up here and even up here. This is a target range from 20.5 to 21.5. Now, this is more or less a shooting star. So for the next couple of days, I think we're going to see a pullback in the VIX before the rally. We're going to see something like we saw back here. All right, so I think that bearish VIX for the short term now, this is not long term analysis here. This is short term. I think the VIX could drop, which could cause the S&P to rally just a hair before going lower. Remember, for the most part, the VIX is inversely related to the S&P. And before we get into a discussion of crude, take a look at this. This is what we're talking about here. This candle today, even though it's a smaller green candle from yesterday, I want you to pay very close attention to the volume increasing on the way up. Now, putting 2 and 2 together, what do you think that means? Well, if the volume is going up when the price is going up, well, it tells us that the buyers are more motivated. So for our members who remember this from one of our webinars last week, I said that I would not be surprised to see crude up into the low to mid 80s. So there's going to be my target for crude. And the reason I have that target at that level is because if you look to the left, you see this little pivot right here? That support level drawn straight across right there is going to be a resistance point. This is known as the role reversal, right? When you have a point where the support is broken, it generally rallies back up to where the former support was, and it turns into resistance. So that's what we're looking for there. And, you know, with the news of Iran being so fresh, and I guess you could say volatile, because we really don't know how long this is going to last, I'm going to have to bring on Nod from the Nod Live news feed to talk about this because, well, Nod, you put it out in the Nod Live feed today that Donald Trump is asking for, what is it,
$1.5 trillion for defense spending.
Yeah, $1.5 trillion. So, folks, we're going to be keeping an eye on the defense stocks, considering, you know, there's so many of them. We would be more focused on Lockheed Martin, Northrop Grumman. We could be looking at Raytheon.
Right.
You know, where's some of them with GE or some of the ones you want to look at. And while those are pulling back today with the general markets, you know, if you have to understand that if Congress approves that increase in military spending, upon that news being released, I think there's a good chance that we will see that approved. You're going to see those stocks that I just mentioned and more, especially the other defense stocks, are going to almost immediately pop on any news coming out of Washington. So we will be considering positions in those, but not right now. We're not going to take any long positions until we get a bounce off the support or as we get closer to a vote being held in the House. So now, what else do you have to report there? Because there's a whole bunch of it, and I'll give the mic to you to do that. And then we're going to go, folks. If you're joining us on X, you might want to consider joining us on YouTube next time, because you could ask us questions, put in ticker symbols, and we'll pick those up from the live chat, which is very much alive right now on YouTube. So now take it away, and then we'll go to the chat box.
Yeah, thanks, AJ. I appreciate you. Thanks for giving me time to set us up into the close. But thank you, everyone, for joining us. We do appreciate you taking time out. Listen, the Dow lost 500 points on Wednesday as President Trump told NATO summit that Turkey that the ceasefire in Iran is essentially over amid renewed hostilities in the Middle East, which did send oil prices higher. Consumer stocks that are tied to the price of higher energy, like Home Depot, McDonald's, Bookings, and a few, did trade lower intraday. We did get some Fed commentary. The Fed officials were split in their direction of interest rates from the last meeting in their minutes. Officials did maintain a hawkish tone while holding interest rates steady, as we know, but all the participants agreed to keep the interest rates the same, though a few did say that they were leaning towards a Fed hike. So that is one we need to watch. And really, check this out, though. AJ, you talked about crude oil, and we talked about what's going on in Iran. But on top of that, the U.S. Strategic Petroleum Reserve stocks hit the lowest level since 1983, sending Brent crude oil above $80 intraday. And so, AJ, I think, you add that on top of what's going on in Iran. So we have the technicals, and then we have the geopolitical. I know you want to talk about the mosaic structure, but I mean, I was really happy that we pressed people on not having negative delta. That was kind of a catch-all, kind of a trade that people wanted to put on. I'm glad you were emphatic about that. But outside of the technicals, with regards to the mosaic structure, what could that do to the price of oil moving forward?
Well, let's talk about that for a moment. Now, it was, I believe it was May or early June, we talked about the Mosaic defense plan to more or less I guess you could say, divide the country into 30 different parts. And what that means, let me show you a diagram here so you could really get an eyeball on what this looks like right here. The Mosaic Defense Strategy is broken into 30 different provincial units. And so this is what they did or have had in place for a while, but they fired off this plan shortly after the heads of state and their commanders were more or less being knocked off one at a time, like sitting ducks, more or less. And so in order to keep the country in more or less a defense mode, they basically put out 30 different commanders to be in charge of each one of these provinces. And so they fight independently. That's very important that you understand that. So let's throw a scenario out here. I don't have my ear to the ground in Washington, and I'm certainly not a fly in the wall when it comes to the meetings they're having with the Defense Department. But if you look here, let's say that Donald Trump says, okay, they're going to start negotiating peace over here in this part of the country with who they believe is I guess you could say, the most influential leader of the bunch. And then all of a sudden, on the north part of the country, this rogue commander says, you could talk all the peace you want, but we're just going to continue to fire off these drones. Well, that makes things obviously a lot more difficult to strike some kind of a peace deal, because now you have Trump not really looking that great, unfortunately, because out of one news agency, we're getting, okay, here's the peace. And so it's peace on, peace off, oil up, oil down. And what is that? What's happening? We're going nowhere. Now, today's drone launch or missile launch on Carg Island is significant because the president really has got his back up against the wall, and he has to come in with the hardline offensive at this point. So they're taking out Carg Island refineries. Now that's their revenue supply. That's everything that they make to drive their economy, to make things run properly for the citizens, is going to be coming out of the sale of oil. Now, if they can't do that, what's left? Well, they're going to have to concede, or the people are going to rebel. And then there's only one other thing that they have left, and that's for the U.S. to attack the desalinization units, which is going to take fresh water away from the citizens. And Trump doesn't want to do that. He's against the IOGC. He's not against the Iranian people. He's trying to get peace with the leaders and have leaders that are going to play nice in the sandbox here, but it's getting more and more difficult. So I could see that if they don't come back to the peace table almost immediately at this point, unfortunately, it's my opinion that I think that this is going to be drawn out, and it could be drawn out for months on end before we get a lasting peace agreement that we could sink our teeth into and the markets could feel confident about. So, in the meantime, what do? As option spread traders, we're trading both sides of the market. We have long positions, we have short positions. In fact, I want to show this to our viewers here. We had almost 60% of our targets have hit. Here's our actual spreadsheet, folks. This is from last Wednesday. Now, remember that between last Wednesday and now, there were 4 trading days. And for those who are brand new to this channel, understand that every Wednesday I analyze 50 stocks, but those 50 stocks are given to us by our members. I do not pick these stocks. These are given to us by our members. And then I go out and I put target prices on those ticker symbols. And as of today, and I haven't checked this after the close, so it might even be at 60, but right now, last I checked, 58% of those targets have hit. Now, overall, over the long haul, 60 trading days, we wind up on average over 82% of our targets hitting. Now, what does that mean? Is that a guarantee you're going to make money? No, it certainly is not. It's not at all. But when you have individual trades like NWL, I'm just showing this one out here now for our members. I can't help not but talk about this because a trade publication went out on this day right there. Let me zoom in here. Let me show you what this looks like, folks. On this day, which was July 1st, in the chat box, who could tell me what this 2-pattern candle is right there in the chat? I know we have a little bit of a delay, but I'm sure it'll pop up. We got a 2-candle pattern there, which is a bearish engulfing candle. I know it's going to come up there. Yeah, we got that big delay. So a trade publication went out on that to buy the December. There it is. Tim got it. Is it Nate got it? All right. So on that, we bought the December 5 puts. Now I want to show you the actual market on this so you understand what this looks like. So on the 1st of July, we bought the December 5 puts for 60 cents. They're trading 85 cents already. 85 cents. That doesn't sound like much, but when you look at the percentage of gain on that, it looks pretty good. Now, I put a video out to our members who may have this one. I said, well, we now have a close below the 20-period moving average, and look down below. Those who follow the CCI could tell you what that means. When we cross below the zero line, which is that black line, we generally see a move lower in that. Now the price will move in the direction across, which is to the downside. We'll see a move lower for the next 2 to 4 days on average. Now, again, if you've never looked at a chart, I would say one of the first indicators you want to learn about is the CCI. It's my favorite indicator. I rely on it heavily. And you can see here the last time we crossed below that zero line back here, this was in May, right? Look what happened. It went right down after that, right? Here's day 4 right here, but it continued to go lower after that. And on the opposite side, I can't help but get excited about this. Look what happened when the CCI crossed back above the zero line. Bam, it took off like a rocket after that. And that's it. Pretty cheap stock, but the options are even cheaper. So depending on how much you have in your trading account, there's really something for everyone in this market. You just have to stay disciplined and make sure you're following our 1% rule for managing risk. And then what happens is you learn how to take your profits when the profits are there to be taken, and then make sure you're using our 7-point trading checklist to be able to find the right candidates. And so that's what we're looking at here. And it just keeps getting more and more exciting each and every week. Now, Nod, as always, we have 12 minutes left in this broadcast. I want to be able to take questions,
yes,
or ticker symbols from the audience, and we'll see what comes up here in that chat room there. Go right ahead.
Yeah, we have a heavy energy and military theme. So let's start with Dane with Devon Energy. DVN, please.
Now, this one had for a while had a really beautiful dividend on this one. And it's not great, but it's just below 3% dividend. So while you're holding the stock, it's giving you that payout in cash. Now, interestingly enough, look at that. From 2 weeks ago, I had an upside target on Devon Energy of 43.67. Now, today's high is 43.59. Yeah, so we missed that by 8 cents. But here we go, the big but. It has an increase in volume. So I would say we still got a little bit more up room, and I think we could rally another 7 cents to hit that target. And then we'll have to see whether or not it starts to pull back from this roll reversal line right here. You see, there's support. Remember that little signal there. There's support. Remember the roll reversal. You look like that. And we got shirts actually in the swag store. I don't know if Nod, you want to put a link to that. We actually got shirts. Trade the breakout. Well, roll reversal exists on the way down. Roll reversal support is on the way up. So you could trade breakouts using the same concept of the roll reversal. But I think that one is going to hit that target most likely tomorrow. And then I think you might see some profit taking, because since last week when it was trading around 40, if it gets up to 44, I mean, anyone's trading the equity, you're making 10% in less than a week. That's not so bad. And again, for the option traders, it's going to be a higher percentage of gain because you got the leverage in the option markets. Yeah, so that's Devon Energy for you.
All
What do
right.
you got?
Eric is asking about buying calls in Nucor. NUE, please.
I would not be doing that. And I can only tell you what I would be doing.
Sure.
The reason I would not be doing that is, again, take out your 7-point trading checklist, if you will, members, and just check off the buy versus sell signals. Okay. Now, if I look at this, I see that little bitty red candle, but it's falling within the body of the previous green candle from yesterday. So that's bearish harami. That's bearish, the sell signal. We have a drop in volume on the way up. Well, that's a sell signal. We got a little bit of a hinge on the stochastic, not to worry about that. But remember what I just said about role reversal? You've got this former support broken on this big red candle here is now going to turn into resistance. And that's going to be resistance from the role reversal. But if you look at where that moving average is heading, that's going to match up with the role reversal resistance. So that's going to be a double layer of resistance. So I would not be touching that one on the long side unless or until we get a breakout over that moving average. Because if you take a look back at the weekly chart on that one, it's coming off hard, and the weekly CCI just crossed below the momentum line. So again, I would not be buying calls on that one. If I take one more step back, and you should get in the habit of doing this, look at the monthly chart. I mean, that looks way, way overbought. I can find much better candidates for buy ideas than that one. So that's just the way I would trade. I wouldn't be touching it right now, like I said, until you get breakout of resistance and showing that resistance holding its new support.
Well, let's find a better candidate. Shane is asking us to look at Martin Marietta Minerals, MLM, please. It's a defense name, and it kind of has a similar pattern to what we just looked at.
Yeah, again, I wouldn't be touching any of these right now. Now, you got to understand, every week, like I said, on Wednesday, I look at 50 stocks, and I tell our members I probably wouldn't be trading 90 to 95% of them because I go with extreme. You want to look for buys. We have a 7-point trading stock screener, right? We call it the Delta screener. And what that does is it scrubs the universe of stocks and gives you the buy candidates and the sell candidates without you having to go through thousands of stocks. So those are the ones I look at. But here's another one that, if you look, we got a slight increase in volume on the way down. So this one's probably going to wind up a little bit lower than the low from last week here. So I would say that one's down. That's going to be got at least another $10 to the downside. So be careful with that one if you got it. And be careful with the options as well. Yeah. Now, we have any questions outside of Tixon? I'm not looking at the chat there. So
yeah, we do. I mean, so Mike is saying thoughts on the metals given the stronger oil and the dollar, please.
Well, let's take a look at the dollar first, because this morning it was up nicely, and then towards the end of the day it closed. Now, what we have here is what I think tomorrow we're going to see a drop in the dollar. Right now, you have to understand why I think that is. Well, to answer that question, I'm going to go to the 10-year rate here. This is a 10-year futures, right, for the 10-year yield. And look at, now remember, this is basic economics, but it's important that traders especially remember this and make sure you don't ever forget it. But you have a resistance area in the dollar right here. See that? And not only that, but if you look at the CCI is in overbought territory right now. So it's telling us interest rates are most likely in the short term. Now, I'm not talking about mortgage rates. I'm talking about the 10-year rate is probably going to drop based on the candle, based on the drop in volume on the way up, based on the CCI. So I think you're going to see the yields start to drop. Okay. Now, when the yields drop, traders are less attracted to the dollar, right? Because they're not getting the return that they once had when the interest rates were higher. Hopefully that makes sense for you. Now, as a result of that, a drop in the dollar is bullish for the metals. Let's go to silver, because I'm getting ready to buy more here. Not yet, but I'm getting ready. You see, I'm waiting for silver to drop. I have a support level on the futures right around 55 to 55.10, at which time I'm going to go in on a pivot and I'm going to launch a new SLV position, and I'm going to use the market's money to do that, because by the time silver gets down to this level, we're going to be closer to July expiration. And I'm short in SLV. I'm short the July 24th expiration, 58 calls. I'll switch to SLV. It's going to look like a similar chart here. So I'm short 58 calls. And what I'm going to do is roll that to August, take in more cash. And then here's the best part: take in more cash, but then use that cash to go right back into SLV using the market's money to buy it at the level. Now, if you have no idea what I just said right there, you missed a great lesson, and you need to come over to Sticky Trades and plug into our Sticky Trade University, where we show you how to trade the wheel. All right, we've been talking a lot about that wheel strategy, and it's working out very, very nicely. And that's where you use the market to get your cash. I see a question just popped in there. Did he stop using PSLV? Yes, I announced that a long time ago. Go to my X page and type in, maybe Anthony, you could put a message on that, the hashtag AJSLV trades. Put in hashtag AJSLV trades, and I post all my PSLV positions that I had. I'm out of that. I let the market know that, and I'm all in on SLV because I'm using premium from the market on SLV, where I cannot do that with PSLV because they don't have options. There it is. It's in there in the chat. Hashtag AJSLV trades. If you put that into the search, you'll see all of the commentary that I've made on the silver market. And when I put trades in, most of the time, but not all, because sometimes there's fast markets, most of the time I'm giving the audience at least a 5 to 10 minute lead before I get in and start buying it. So I'll try to do that when it's time for me to roll my calls, so that everyone could follow along and maybe use some of that market's money for yourself to put in some trades. So it's a lot of fun. Now, 2.5 minutes left. We got to take maybe one more question, and then we're going to get into a wrap here. First, let me say this. Where are you dialing in from or tuning in from? What country, what state? We'd love to know that. And I'm going to ask the same thing on the Midweek Report tomorrow. I'm always interested to see what countries are coming and watching us here. So, okay, Nah, take it away.
Just a quick question. So from Trader Galaxy, he's saying, do you ever trade directionally or just spreads? And I think that's a good chance for you. We've got our scan code there. We trade both. We trade spreads.
Yeah.
Spreads. We trade directional.
Yeah, absolutely. We go directional. We go mainly. My preference is to trade spreads because it's the safest way to go. And hedging one long position with a short position where you collect money is one of the better ways to go. Just to give you an idea, NVDA, we had a cash cow on this one. Oh my goodness. We closed the cash cow. We took an enormous profit on this. But in the meantime, just to show everyone what one of our positions, we have a 205, 200 credit put spread. We sold the credit put spread, which is bullish. Now, today's candle on higher volume with that close over moving average, I think we're going to continue to go higher, which means that the money that we collected from the put spread is going to be banked as cash into our account. So we do a lot of vertical spreads. And in fact, Nod and I were talking in the warm up that we have the ultimate service. Since we've been tracking it this year, I can't make an income claim or a guarantee of any sort, but 100% of the trades that we put out to the ultimate service so far have made money. 100%. We haven't had a single loser this year in that service. Look at coming in from Los Angeles, Trader Galaxy. What was Absurd Nerd dialing in from an undisclosed location?
His bunker.
All right, Wyoming, from Rick. There we go. Beautiful. All right, Sudbury, Canada. Great, Brad. Thank you very much. Letter for Long Island, Scott. Yeah, I'm from Suffolk County myself. It was my stomping grounds. Well, folks, listen, as I mentioned in the very beginning, these half-hour sessions go very, very quickly. We want to thank you for joining us here today. Make sure you catch our not midweek report, the weekly market report tomorrow. I'll be putting that out during market hours to give you a little lead time in the event that you have to make adjustments in your positions, and then you'll have all day Friday to follow through on that report. So once again, thank you. Have a good evening, and we'll talk to you next time. Take care.